Roha Asset Managers LLP, and we also have Kunal who's joining us in the studio. Good afternoon to both you gentlemen. Kunal, let's begin with you because the kind of moves that we're seeing in the market today, once again range bound, but 25,000 seems like it's going to be here to stay. What is your take on 25,100? Because we have not steered too far away from that.
Good afternoon. So yeah, I think it's a okay day for the indices, more of consolidation, and it's a natural way of consolidation because on two fronts. One is that over the last few days we've seen almost like a 4 or 5 consecutive days where the index has closed onto the positive territory. So the momentum was just about getting along for the indices. We managed to break past about the 25,000 mark. So that was another important trigger for the index over the very short term. But the second and the most important part is, when you look at this in the context of the last 1 month of price action, we were forming a double bottom for the Nifty chart. The resistance, so the first immediate resistance for the Nifty is just around the 25,100 levels. So it becomes an obvious zone for the index to just about take a pause for a couple of days before it starts to get back into retest of the upper end of this resistances. The only important factor for a short-term trade to watch out for is that generally if the index consolidates at the first important resistance point, we should not see a change of stance from the option writers. Like what we've seen, for example, from the put writers, from the call writers, we've seen now stance changing to put writers. That should not reverse back into the call writers, which means net-net, we should hold on to that 25,000 mark for the next couple of days. If we do that, then I think there could be one more round of a breakout on the upside for the index. So the view remains positive till the time we trade above and close about 25,000 on the Nifty spot.
All right, so on the spot levels, watch out for 25,000. That could be a make or break level for the markets, but the bias remains to be on the positive side. But Daljeet, hi, good afternoon, and good to be speaking with you. Firstly, help us understand what is your current take on the markets, because everybody has been calling out for that this particular year is the time to be very, very selective in the markets. So what are you making out of it? A lot of these fresh triggers have also come out for the market of late.
Good afternoon.
Good afternoon.
Thanks for having me on your show. See, I think we are not that cautious. In fact, we are calling out that all this talk about uncertainty from global and all of that will probably take a little backseat. We have seen historical also that whenever these cycles turn, uh, initially there is always a suspicion. People take time to understand that whether this is going to sustain or not, how this will work out, and people want to see the numbers. No, so but markets by nature are that if you wait for the numbers, then it is probably too late. So in fact, we are positioned with this view that consumption is going to play a good role there, and therefore most of our portfolio stocks are aligned to that. It is across the spectrum, so right from small appliances company to the high-end luxury car sellers also. So that's the way of dispersion within this sector. So that's one area where we are thinking that probably we'll see good numbers. Second would be the agrochemicals and chemical cycle. Again, we met a lot of companies in this period for agrochemicals especially, and we are of the understanding that this cycle, which was 3 4 years, too much of inventory stocking, etc., and which had led to price crash, that is probably now coming to an end. So most of our companies are positioned to get the benefit. Volumes have already started coming in, but pricing is still elusive. So maybe in next few months we should see that also falling off. So that's why we say that this sector probably again will see good numbers coming in.
Good moves coming in today, as was the case with IT last week. We saw a couple of days of up move coming in and it got the street excited, but it all fizzled out. Do you think that story could repeat with real estate? Because today is the first day of gains coming in for this segment after a very long time. So it could be a lot of time-based, up move as well. But do you think this is here to stay, or do you think this is largely news-based and could fizzle out by tomorrow or day after?
I think it's a very good question, and I believe in the context of the market so far. So, let's first understand over the last, 1 week, 10 days of the setup where the Nifty's moved up higher. We've gone through a churn across various sectors, phase by phase. So, initially it started off with auto stocks doing pretty well. Then there was a good recovery of, FMCG stocks. led by recovery from the pharma pack, then private sector banking names, PSU banking stocks, defense names, etc. So the only catch over here was a sector like real estate, which was a huge underperformer over the last 2 months or so. Many of the stocks within the real estate pack, I think, had corrected more than 10% to 20% in that kind of a time span. So it was obvious that there's bound to be a point where the realty pack would also get into a breakout mode. I think today, in the back of this news flow trigger, etc., there could be a point which could be made that we could now be looking at a short covering spree across many of the real estate stocks. And even if that happens, even if assuming that this could be a short-lived momentum upside, it would probably just about play out like how the IT stocks and the IT rally played out, where you would see at least 2-3 days of a very strong surge of momentum, where the large cap names probably moved up higher by 5% to 10% in a very short span of time. So I would probably expect something similar happening for the real estate pack. These stocks are up on an average 2%, 3% so far. But I believe that if you look at in this, say, at least in the context of the next 3 to 4 days, I would look at a further 5% swing upside for many of the real estate names.
All right, so that's the take coming in on the real estate counters. But Daljeet, this whole discussion, or rather some reports highlighting that data centers can be given some bit of a tax relief, and that could be for as long as 20 years. What are your thoughts on that? And yes, Anantraj is one of the counters that is seen to be buzzing, but along with that, help us understand any other segment where you believe that one can really look at. If you can talk stocks, then that'll be great. If not, then what are your thoughts on this overall news piece?
You see, this story is very long term. There's no doubt about it. There is a big potential here, and data centers as a theme will play out for a very, very long time because it has just started. No? The government is making rules that most of these companies will have to keep their data in country. Reliance has just mentioned in their AGM, they are putting up a big data center, gigafactory kind of thing there in Jamnagar. So there is a huge potential for this as such. But how it will play out and how long it will take, we will have to see. Now, Anandraj is the nearest right now moving because that's the prima facie, the first beneficiary. We don't have any position in this company as a disclosure. But definitely, as a theme, this is going to work. Now, one thing we have to be cautious is when there is a fad for a theme, you normally end up paying too much of valuation. And for investment and portfolio managers like us, valuation is a very important criteria. So we tend to avoid when things are in fashion, when things are out of the fashion, when sector or theme, when most people are not looking at that, that is the time when we look at them. So probably we will, as of now, stay out of this theme. Let the valuations cool down, let the numbers come in, more clarity on this policy, etc., should come in, then we will probably take a call. But there's definitely the theme is going to stay there for a very long time. You were just talking about another sector on real estate. So our take there is probably instead of playing real estate as of now, cement could be a good sector to play at this point of time. We normally juggle between these two because both of them are complementary. So if you say that, see, in real estate, the problem is that a lot of top tier cities, the price per square feet has already reached peak. So there is very little scope for further price movement. Now it will be only on the volume growth which will come. And many cycle of this real estate has also been going on for last 3-4 years. So what we believe is that probably now it's better to play this theme through cement, where there is a lot of consolidation has happened. Many companies, there is price discipline. If you see in East, they have raised the prices for last 6-7 months and they've stayed put there. In North, some movement is there in the pricing. So while Q2 numbers will be slightly lower because of the extended monsoon, but that can give a good opportunity to enter in this sector for anybody who's looking for a good long-term investment in cement. So that's one area again